Ladies and gentlemen of the crypto space, today is Tuesday, July 21st. Still haven't got that down where I could be like, I know what day it is before I actually say it. Absolutely incredible. Today's topic I wanted to talk about was UTXO and obviously how it fits into the DeFi big picture. But bear in mind, this is an old school topic because, you know, folks that have been around since 16 and 17, it was predominantly UTXO assets, and it was just a craze with Ethereum coming on the space with ICOs and ERC20 tokens, and it was just literally just garbage. It was all garbage, and frankly, there was a huge amount of UTXO garbage as well. Forks was the big thing for many years. You would have masternode projects that were all forked off of Dash, and then they were forked off for themselves, and then they were forked off for themselves, and they just kept getting forked until you go on masternodes.online website, and you have 5,000 different variations of masternode garbage. So, for instance, back in 17, I think I had 26 masternodes at one point, and it's been over the years reduced to a solid seven or eight projects that actually not only are still good, are some of the strongest UTXO projects right now, or period, or yeah, they're really good. We're talking Blocknet, we're talking Syscoin, we're talking StakeNet, we're talking Alquo with the Bitfinian exchange release. Four has been a little quiet lately, so I don't know. Polis is up there and in something that is still alive. I don't know necessarily the traction and velocity and momentum they have, but it's just worth mentioning that they are still around when so many other countless projects are completely evaporated or just disintegrated into nothingness, part of the ether now. Um, so that who's in the chat? We got Craig, we got Adam, we got Digibody Just Nibble. Yes, another day. So you got basically two types of technology that has come out over the last 11 years. You had Bitcoin with UTXO technology, which is um, systemically and functionally comparable to what Ethereum does, but the big difference is from a high level perspective, UTXO blockchains are scripting or type of script language that you can do to get to achieve functionality. Whereas with Ethereum, it's not a script language, it's an actually Turing complete language where you can actually write code and perform logic and algorithms. That is the major high-level functional difference. Um, they both, both technologies, both ecosystems have a significant role in the future of the blockchain space. Do not discount UTXO technology merely because you could do crazy stuff on Ethereum like we're doing with DeFi, and clearly we're going to be able to do fancier stuff on Polkadot and Cosmos. Um, but they all have their place, and even something competitive has its place. I do not see Polkadot nor Cosmos disrupting the velocity and momentum of Ethereum. Ethereum's got like 3 billion plus at this point. Let's take a peek. Still got the intro screen up. I think that's Syscoin, but let's take a look at DeFi Pulse. Did it crack three? $3.04 billion. Huh. Wow. In the DeFi space on Ethereum. Now, the DeFi space does not include what's on uh, Kusama, Polkadot, or Cosmos. It's just it's not robust enough. There's no dexes, there's no liquidity, there's no movement of value. And that's really what is so tantalizing about DeFi and Ethereum is the movement of value. It's all over the place. You go to 1 inch. I mean, you go to Curve, you go to CurveFi. What is their daily volume like? What was it, $200 million a day they were running around that? Let's see if we get some stats real quick. They have $298 million AUM, assets under management, and they're hitting $70.5 million a day in activity. Oh my goodness. The growth is massive. Yeah, so that's exciting. And clearly, this is just the beginning. Um, I mean, look at the real world. Look what's going on, and that's what the whole point of yesterday's talk was. Uh, Value flows from lack of opportunity to scenarios where opportunity presents itself. Now, there's nothing in the legacy financial system. What am I going to put money into a property REIT that has warehouses, and the warehouses are clearly bought on mortgages, and all the tenants are gone because all the businesses aren't operating, so the warehouses aren't making any money to pay their debts, but they borrowed $2 million from the CARES Act, the PPP loans, so they're paying their debts with money they got from the government that'll get forgiven, but they're making no money because they have no goddamn tenants. So I'm not going to put my money into a REIT, even though they on paper look decent, that they're paying their debts. Meanwhile, they don't have any tenants. So how are they going to make money once their free funny money from the government runs out? None of this is sustainable. And this is exactly what this chart represents. This is gold versus USD. This chart represents doubt. Well, this is FUD, fear, uncertainty, and doubt that anything that is going on right now is even remotely sustainable. Now, this thing just keeps going up all day long. It was at 1836. I mean, it's not crypto. It goes up by dollars. But the point is, it's going up. I've seen it just go up all day long, straight from the start of the market open. I have no faith whatsoever in what's going on in the equity space. Um, and that's the whole point of why it's so exciting in the crypto space. We have 11 years of UTXO technology that has been built out. We have, what is it, 5 years, give or take, 6 years of Ethereum technology that has been built out. Combined, that is a systemic disruption that is greater than the sum of its individual components. There's a synergy with UTXO technology and smart contract platforms. Clearly, Ethereum being the predominant smart contract platform currently, but there's going to be meaningful competitors. Take a look at the comments real quick. Yes, sir, South Florida in the house. Woo! Yeah, we on lockdown, man. I don't think anyone's getting out of the house down here in South Florida. This place is like a hot zone. It's crazy. The virus is everywhere. I'm not going out. I'm staying at home. I don't have time. I don't know. I know people will say, you got to live your life, or I'm being fearful. And I say to myself, I've seen my relatives sick, and I've had like 30 people in the family with the virus, and they say it's worse than the flu. It hurts. Your body hurts. And I've had the flu many a times, and I know with the flu, I don't feel well. My body hurts. And they're saying this is worse than the flu. And that's not that's my family that have had, you're watching them on a video cam, and you can see that they're sweating. They got the chills, they got some shaking. I have absolutely no time nor freaking interest in even remotely getting sick. I don't even want the flu, yet alone whatever the hell this virus is. So I'm sticking my ass at home. Okay, I digressed. I'm just saying, I'm not going anywhere. I have absolutely no interest in getting sick. I don't care. I don't care. Cheers. What's my take on Yearn Finance? I'm not. I don't. I don't FOMO. I have no interest in FOMO. I'm at work. I got work to do when I jump off this call. I got so many charts up, as you see at the top. So I was ripping through charts yesterday. I got my positions. I got my portfolio. It is well thought out, well balanced. I got, frankly, I really only got one trade position open. Everything else is like long-term, well priced in. The quantity chosen is carefully thought out, and I don't have to think about it. So I only have one asset where I have about 40%, 45% over positioned, waiting for a substantial run up so I could produce some Ethereum gains. And that's about it. Everything else is sized right for me not to have to think about trimming. And that's the way this game works. Position sizing, portfolio balance, protect gains, recurring revenue streams, as I've talked about. So do not, the risk reward. So oversizing the position, waiting for the appreciation to trim the gains, and you still have like the vast majority of position. Like let's say I have 20, let's say I have 36,000 of something, and my long-term position size that I want is 20,000, and I could, so that means that when it pumps to somewhere that I think is cool, I'm going to trim about 16,000 and leave me with the even 20,000. So that happens to be one of my the numbers for one of my particular assets. Um, so that's there's risk reward. The more if you did that with a lot of assets, there's more risk, particularly because now you have to manage more assets. Um, and that's not easy. That takes time. How much time do you have? I know I have to get back to work at some point, so I don't have the time to do that. So I minimize my risk so I don't have to babysit these assets. Um, anyway, I digress the crap out of this stream, but we're having fun. So I don't FOMO. You're in finance was the whole point, I guess, that to that response. Although it's interesting because that's a recurring revenue stream. But here's the deal: recurring revenue streams, you're gonna get 8% on your money. I need I need a million. If 8% on a million is 80 grand, that's the deal. So if I want to replace my current salary, I need to know how many millions I need in order to replace my current salary, and that's my goal, and that's freedom, and that should be everyone's goal. But the problem is, um, that's not so easy. It's not so easy to accumulate, two, three, $4 million. 8% on, to the 3 million is to 240 grand. I'd like that 240. 240 is more than I make, and that'd be nice. So, be realistic. The interesting thing about math and investing is crunch your numbers and write down your numbers. If you know that you could get a safe like 2, 3, 2, 4, 8% by throwing in BlockFi, Celsius, Compound, Aave, and you diversify your positions, and you get there's a Nexus Mutual, you get some DeFi insurance, and you really have to break things down and be prepared for these types of scenarios. And what happens if Bitcoin, and you have, let's say you have two Bitcoin, and it goes to 100 grand. Now you got 200 grand. That's not going to get you to where you're looking to get to. So you have to be honest and practical. And you probably to get to where you want to get to, you're going to have to play some all positions. You gotta have, which means more risk. You're taking more risk, and you might not even see a path to get to where you want to be. And that's where we have conversations like this. That's where you ask questions, and we do the best we can. That's all we can ever do is the best we can. What do you think of the CRO coin? No idea. I have no idea what it is. They have 350 million insurance to cover any hacks. Cool. I like these insurance DeFi projects are really cool. Quite tempting. What is your portfolio? My portfolio? Hmm, um, yeah, you go. All right, fine. Let's do it. My portfolio is predominantly Bitcoin. So that trade that I told you guys that I got on the table, that's Bancor. Um, I have all intention of holding a very large position, but I'm 50%, about 45% over positioned. My position sizing. Um, because this thing is on here. Do I have the screen up? Yes, I do. I've been on gold this whole time. How boring is my stream? Look at this breakout on Bitcoin. Let's look at some charts real quick and have some fun. Why didn't somebody yell at me saying we're not having enough fun? Let's look at some damn charts, Noah. Do I like Celsius? Sure. Celsius is cool, and so is BlockFi. They do it. They're doing exactly what the DeFi lending protocols are doing. They're over collateralized loans. They're taking on no risk, and the reason they're paying such high yield is because they're incentivized. They have investors, and they're getting collateral. They're incentivizing liquidity, and then they're doing loans. Companies are taking loans. Sure, the loans are over collateralized, but people they want to leverage their position. That's the whole point. That's the way the system works. Over collateralized lending takes all the risk off the lender, places it on the borrower, and that puts BlockFi and Celsius likely in good business positions. Now, clearly, if you're placing a huge investment, you're going to want to do your due diligence and understand the books and what they're doing. But frankly, conceptually speaking, what the DeFi lending and borrowing protocols are doing is likely what these companies are doing as well, and it's on point. Over collateralized lending is a solid, viable business concept. What do you think of RCL? Yes, uh, I had it open. RCL is decentralized compute. Uh, let's just pull it up real quick. So iExec is cool. So bear in mind, I did I liquidate my position? Yeah, I sold out of it. So I don't. It's too diversified. If for me to hold it, I'd be too diversified because I need to focus on either core protocols that I think are going to be systemically relevant or protocols that have overwhelmingly sound monetary principles. Frankly, Kyber Network is deflationary. Bancor is about to release a systemic disruption with its V2 protocol. It's going to take some time for them to iron out the kinks, but it's a systemic disruption. Cosmos is in my portfolio. It's basically the core hub, at least the root hub of the Cosmos network. There's going to be other hubs, and then basically the way it is, hubs are blockchains, and then you have stuff that's built using it. Um, yeah, that's the same thing that Polkadot does in many regards. It has parachains, so it has chains and then stuff using the parachains, and it's really cool what Polkadot and Cosmos are building out. It's ecosystems rather than just a blockchain. It's a blockchain of blockchains in almost all regards. Other positions, Digibyte, no doubt. So Digibyte, it's a set and forget. It's not the largest position, but it's a good sized position. Like if Digibyte goes to $1, Big Daddy's taking a vacation. I'm holding a position in synthetics. It's tiny. I made a lot of money going from 70 cents to $2.80. And that's all been trimmed. Now, I have a small, it's relatively small, but it's literally 5% of my original position. But I have a lot in escrow, um, meaning when you take your SNX and you mint SUSD, you're getting SNX yield as well as a little bit of SUSD, but you're getting SNX yield that's escrowed for 1 year. So I have a fair amount in escrow, and I'm holding a 5% of my original position. And this is just something I'm going to forget about. And let's see where it heads. I mean, this is like literally like 2% of my gains that are completely taken now at this point. I mean, synthetics could just go 4, 5, 6, 7, 10. I don't know. Who knows where it ends? But that's the whole point. The whole point is even if you trim early, even if you trim early, you're still trimming, and you want to accumulate because when this shit rips, when this shit rips, this is Ethereum, ladies and gentlemen. When this thing rips, you know, you're going to pull off at least a couple 100% right off the bat. weeks. If you pull off, if I hit five X on this, it's gonna be a nice. It's gonna be nice, and that's the goal. That's the goal. So Ethereum and Bitcoin have been dormant while the altcoins have been moving. So the altcoins move, you generate gains, and you move it over to Ethereum and Bitcoin. Ethereum and Bitcoin move, you generate gains, and in 3, 4 years from now, you move it over to stable coins, which someone asked me on Twitter to talk about. Yes, stable coins. And that's why this market is going to be quite different than it was in 2018 when things started ramping down. Um, we have stable coins, and it's a robust stable coins, as in there's programmatic stable coins, and it's not just DAI. What is it? Haven? There's a bunch. Reserve rights, RSR. There's a bunch that come to mind. Duma says parachains. Yes. I am tickled pink by Polkadot and the development activity that I showed everyone in yesterday's video. The development activity on Polkadot is just non-stop. It is huge. And frankly, the development activity is big on Cosmos as well. It's bigger out of the East. And that's why I'm interested. People could have negative connotation or negative sentiment towards China. All I know is it's one of the largest countries in the world. Extraordinarily smart, brilliant people. Look, I absolutely love the culture. Love the culture. Love the history. There's absolutely no reason whatsoever to be biased or have stigma about the incredible things that they're pursuing and doing. Sure, we could all be a little bit questionable about their government, but oh my God, look what's going on in the U.S. Oh my God. So let's not be hypocrites. Because we sure as hell have a ridiculous government. Okay. My DigiBuy position versus Bitcoin? 8%? 8%. I was calculating, sorry. My DigiBuy position is 8% of my Bitcoin position. How do you do this escrow thing with synthetic? So you go to Minter. Was it Minter? Here. You go to the Minter. Mintr.synthetics.io. You log in. You click Mint. Ooh, it's coming down a little bit. You click Mint. You have SNX in your portfolio, obviously. You click a little bit of SUSD to mint. I can't mint anymore because then you hit mint. You're gonna want to watch your gas fee. So 72 is what it's at right now. You go to fgasstation.info. 84 is gonna get you done real quick. Expensive gas today, Jesus. So you bump it to 84 because I don't have time. I don't have time. You can't even bump it to 84. It's above the Minter. Oh my God, 84 is a ridiculous gas number, by the way. Look at that. It's $20. It's literally $20 worth of Ethereum to hit that transaction. I don't even know. The only reason I could do it is because I mean, if I have like 3 grand worth of synthetics right now, I think it's gonna mint me probably like $80, $100 a week, give or take. All right, I'd wait for the network fees to calm down. But obviously, it's already on the screen, so what am I going to shy away from it? There's my Ethereum position. So that's what you do. You accumulate and you wait for the break, and then you trim off the top, and you spread things out, and then you're accumulating. So think of it as like falling avalanches. It falls down and spreads out, or a volcano, even better. It grows up. It grows up and it spreads out. It spreads. It's one of those metaphors. There's probably a better metaphor, and that's the whole point of accumulation. Let's take a look at the comments. F 2.0, cool. Let's see what they do. They have a long way to go. That is a very sophisticated system they're trying to deploy, and that is not going to take a short period of time for them to fully roll out. Can you YouTube a dark node special? How to? I did. My pleasure. I'm happy to do a dark node. It's literally. It takes about 3 minutes to set up a dark node. It's literally download a CLI, which is like wget and the CLI. So wget is a terminal command on in Unix and Linux, which on OS X it's like boom. It's like copy paste. There's your CLI. Then it's like you go to AWS. You have a couple of tutorial steps to set up user credentials, secret key. You download your key, you get your key out of the file, you jam it into the command prompt, and boom, you create a dark node. And then everything else is done by you in a browser. So the dark node spins up, and then you configure it in a browser using MetaMask. You deposit your funds, and that's about it. And to create the bond, of course. Uh, and can you find to run with a 5K investment? No, you need a 100,000 Ren, which is expensive. Just being straightforward. I don't want to be confusing uh, Captain Weber. Um, 5K doesn't do it for Ren. Ren, I think. What is Ren at? Here, let me check. 12, 18. 16,000. I think it's about 16 grand for a Ren Dark Node, give or take. Anyway, 100,000 Bren for the Dark Node. Cosmos will be massive. I had weak hands and sold out of my band early. I'm into band. I'm into Iris and Cosmos. Atom. Kava, tempted, but this Irida has me. Uh, Iris, Iris Irida. Irida is the block is the application more or less. Uh, Here, Iris Irida. Is this it? No, this is probably just a person. Really? So you look IrisNet here. Team between IrisNet. So Iris is the blockchain, which is a Cosmos hub, but their Irida is their enterprise product. This is their enterprise product. I mean, this is big stuff. This is China, guys, and they're working with the BSN. So this is big. I mean, look, wasn't Iris just listed on Binance today? Oh, very cool. Um, why you hold more BTC than DGB? The Digibyte's not going to flip Bitcoin. Digibyte, frankly, could go up much more. Frankly, you can make a lot more gains with Digibyte than you can Bitcoin. But that's not the way risk reward and portfolio balance works. That's just not. There's no assurance that Digibyte is going to go up. Like there's no assurance that Bitcoin is going to go up. So in many regards, you go by history and track record. Clearly, Digibyte has gone up X amount over the last 3, 4, 5 years. Bitcoin has gone up X amount over the last 3, 4, 5 years. There's also prevailing sentiment from the large macro picture. And you have many of the institutional investors, at least the newer and more innovative ones, Raoul Pal, Novogratz. These boys are into Bitcoin, and they're not into Digibyte. You know, maybe they've heard of it, but they're not throwing millions in. They're not talking about it. They're talking about Bitcoin. So, Bitcoin is the more stable, obviously, than Digibyte. So Digibyte will be more volatile. It'll be able to produce more gains. Um, but that's not, as I said, it's not the way portfolio balance works. Just because Digibyte could go from 2 cents to $1, 50x on the money, doesn't mean you stack your portfolio to that risky. Because what if it stays at 2 cents? And when then Bitcoin goes 5x. And as you saw my Ethereum balance, I don't need 10,000% gains. That's it's all about risk reward. If you want to always minimize your risk and maximize your reward. Now, clearly, if you have less to lose, you are able to take more risk. And that's actually quite interesting. If you have more money You want to minimize your risk because the whole point of this whole freaking game is to protect your gains. Once you get it, you got to protect it because then it's gone. So, and if you have less, you have nothing to lose. So you're able to take more risk. It's all about risk reward. I think I can't emphasize that enough, how meaningful that statement is, risk reward. And it's so relative to capital availability and portfolio positioning and balance. Let's take a look at the comments. Right now, I'd lean on ETH. Way too much upside. Definitely undervalued. Yeah, well, ETH is going to pull off probably a 10x at some point. About 2 grand, 2,400, 2,500. And some people think a 20x it'll hit 5. So, I mean, just it's frankly at this point it's ridiculously stable. So, ETH and Bitcoin are performing as a store of value. And if there was volatility in Bitcoin or Ethereum, that's when you migrate to stablecoins. So this is quite obvious how to play it. Running out of time. Take another minute. I feel like selling everything into Ethereum. No way it stays at 240. Yeah, right? Right, Tyler? This thing's not going to stay at 240. It's going to go up very nice. But bear in mind, risk reward. You're not going to get the biggest bang for your buck with Ethereum. You're going to get more bang for your buck with things that are more volatile. Oh, good. I wanted to show everyone this chart for a second. I think this thing's going to collapse. This Ripple. I mean, look at this here. Overbought. Was it the 15-minute? I posted it on Twitter the other day. It just doesn't look so hot. Looks like it's going to collapse. Another leg down. CIS looks good. CIS is a great investment, but they've been beaten up, like down 97% at this point from a couple of years ago. I don't know. You can see the tickers up here. I got gold, I got Bitcoin, Ethereum, CIS, XRP, DGB, RSR, Link, Lend, Kyber, Ren, and Synthetics. That's what I'm looking at the moment. Just food for thought. Let's wrap this up. Always a pleasure. 12:32 Tuesday afternoon, July 21st. Hit me up on Twitter. I'm going to get some questions out there and see what everyone wants to talk about tomorrow, but it is always a pleasure. Thank you for joining. I'll see you soon. Peace.